The Magnificent Seven seeing nice gains following Q4 earnings, with the group now up about 9% for the year. My next guest says while the names are richly priced, only one is, quote, priced to the point of insanity. Let's bring in the Dean of Valuation, Aswath Damodaran, NYU's Stern School of Business. Professor, welcome back.
Thank you for having me.
The one that's priced to insanity, you suggest, is NVIDIA, which is interesting because you own it along with all of the others, correct?
Yeah, you bought these stocks at the right time. They were amazing buys at some point in time. At today's prices, I mean, all of the stocks looked overpriced. But I think NVIDIA stands out as particularly overpriced. I mean, just to get a collective sense of what these 7 companies account for in the S&P 500, these 7 stocks alone account for 70% of the overall market cap of the index. They account for 11% of the revenues, but they do account for 27% of the gross profit. So they're very profitable, very valuable companies. And you can get pretty close to the current prices for the other companies. NVIDIA, I can't even get close.
I'm surprised somewhat, if only because the valuation of NVIDIA has come down as its earnings and guidance have gone up. So in some respects, what was perhaps insane has actually been justified in some respects.
No, in a sense, there is an adjustment process going on. I don't know where it'll end up. The truth is, when this process started, people assumed that NVIDIA's domination of AI, the chip part of the business, would continue in perpetuity. I think the other chip companies are waking up. Things are going to start to scale down. So I think in spite of the come down in price, I am more wary about NVIDIA than I was, simply because last time I valued it, NVIDIA was at $400. It gives me some kind of perspective in terms of at 682. I mean, that's a stretch that's given the current earnings potential and cash flows. I just can't get that. Maybe I'm just missing some part of the picture. But to me, it doesn't make sense.
I mean, you're not alone. That's for certain. Look, price target went up to 800 yesterday from one firm. And today, on my earlier program, the halftime report, Josh Brown, who's been in NVIDIA longer than anybody I know, sold 20% of it. I want you to listen to what he said, and let's react on the other side.
It just feels like there are people who are so bullish they've run out of superlatives and ways to describe NVIDIA's market position and their technology dominance, and they're just like raising price targets. It's almost on a weekly basis. It's become breathless. I just felt like the chart went vertical and people have just like lost their minds. I'm as excited about generative AI as anyone else, I'm bullish. I'm just not that bullish where I think a stock should go up, where I think a stock should go up, 20% every month just because the alarm clock went off and the sun came up.
What are your thoughts?
No, I agree with them. I think AI has become this buzzword that people use to justify pretty much anything they want. I mean, I think collectively, AI is going to be a net negative for markets. It's going to be great positive for companies like NVIDIA. But I think the laziness with which people attach premiums to companies just because they see the word AI, and you see that partially with Microsoft as well, is, I think, terrifying, because at some point in time, reality is going to play out and it's not going to match those expectations.
I'm wondering, when you look at some of these other companies within the so-called Mag 7, which seems to be maybe decreased by 1 or 2 of late, like a Microsoft, for example. So Microsoft's 10-year historical average is low 20s. Now it trades in the low 30s. But what was Microsoft doing over the last 10 years? Is it legitimate that its multiple now is in the low 30s by relative to how profound this relationship with OpenAI can really be?
I think it's a company that's closest to creating a subscription model around AI in which it can make money. I can't think of another company that's as close. So part of that increase, again, comes from the reality that AI is going to open up new businesses. But as a long-term owner of Microsoft, again, I'm looking at $404 or $400 per share, and I'm saying, I'm definitely happy that it's gone up to 400, but again, a lot has to go right for this price to be the right price. And pricing in that expectation sets you up for unpleasant surprises down the road.
I mean, the forward P, we're looking 38. So I hear you. What about Apple? Let's leave it with Apple. What are your thoughts here?
I think there are two companies in this seven that if you really, really wanted to buy these stocks, you've never owned them, you say, I've missed out. One would be Tesla, which will surprise you because I bought Tesla just a couple of weeks ago at 180. And the other would be Apple, which I think is adjusted down. It's still a cash machine, but Apple over the last 15 years has lived from iPhone upgrade to iPhone upgrade. It has a bad year, then a good year based on whether there's a big upgrade during the course of the year. So I think Apple will bounce back a little bit. It's a slow growth cash machine, and people have to be realistic about what they're getting. But I think that at 188, it's as good a buy as any of the other seven. So Apple and Tesla would be my two buys among the seven if you really wanted to add two of these stocks to your portfolio.